Currency Space. I'm your host, Piter, joined as always by Ozzy. There's a lot to get to, as usual. It's the biggest week since last week, so let's go. Please do your own research, as this is not financial advice. First story we're going to do, in line with our meme of the week, FTT experienced a price surge of over 80% in a 24-hour period a few days ago. U.S. Securities and Exchange Commissioner Chair Gary Gensler hinted that he would be open to a rebooted FTX as long as it is done, quote, within the law. Back in September, the block reported that Bullish, that's the name of the company, digital asset exchange of which Farley is the CEO, is among bidders interested in acquiring the defunct platform. Also, fintech startup Figure Technologies and a venture capital firm, Proof Group, are also bidding to buy FTX, according to the November 8th report by the Wall Street Journal. And back in January, the lawyer, John J. III, who oversaw Enron's bankruptcy, floated the idea of restarting the exchange. He said, if there's a path forward, we will not only explore it, we'll do it. But on the other side, we have others saying that maybe this is just a pump and dump. 117 Partners founder Thomas Brazil cast doubt on whether a rejuvenated FTX would ever succeed. It's a head fake. FTT is a zero. No buyer of the asset or relaunch partner is going to use or include FTT. So what do you think? This is a head fake or?
Strong head fake. Really strong head fake. FTT is dead. There's no reason that anyone that buys FTX would have to use FTT. And really, looking at FTT, there was no use case for it in the first place. This is people getting hypey on maybe some additional money being returned, but even that's, I think, a stretch of the imagination for FTT holders. I don't understand this. I also really don't understand how it's still so high up in the total market cap. It kind of mind boggles me.
Like in the 30s or something?
Yeah.
I was just looking at that. I was shocked. I mean, maybe it went up a little bit, and that's why we both noticed it recently because of this pump. But it's like, what is it even doing on there?
It doesn't belong. It really. I think part of it has to do with the fact that FTX hasn't had a chance to maybe dump all of their FTT tokens. I mean, even if you look at CoinMarketCap, it literally says that the FTX bankruptcy proceedings are underway and that the FTT token no longer has any use and may be liquidated by the estate to pay creditors. So, I mean, I think that warning says it all. Really, this is a head fake. If anything, it's like a pump to get a little bit more to creditors. It's absolutely ridiculous.
Yeah, not something I'm touching, but interesting story all the same. Move on to the other big news this week. I kind of had the big pump in the alts, and part of it seemed to be fueled by this BlackRock news. One, just to report on it, there was some fake news spreading around on X today, Twitter, about a BlackRock XRP filing. It looks like it's a nothing burger, or maybe just someone went heavy long on the XRP and threw BlackRock's name in there and kind of tricked the market a little bit, something like that. But not true. It doesn't seem to be true. Someone from BlackRock came out and said that it's not true.
Yeah, people have been loving to throw BlackRock's name on anything crypto lately. Like trying to hit those roll bit bets, I'm sure.
Yeah, it's a hot narrative right now, that's for sure. What was true was BlackRock filed to launch Ethereum Trust ETF on NASDAQ. So BlackRock filed 19B-4 form with the U.S. Securities and Exchange Commission, SEC, to list shares of iShare Ethereum Trust on NASDAQ. The initiative could provide U.S. investors with a regulated spot exchange-traded fund to track the price of Ethereum. Ethereum saw a price surge of over 13% against the U.S. dollar. And I think it's bucking the trend today, too. It's up a little bit while Bitcoin's down. The price surged from 1885 to 2135. This ETF proposal from BlackRock arrives against the backdrop of the SEC's recent approval of Ethereum-based futures, although kind of to lackluster performance, and ongoing discussions about the regulation of a spot Bitcoin exchange traded fund. This is kind of my notes on it, but with BlackRock having a 575 to 1 approval track record of ETFs, and this filing seems to add fuel to the Bitcoin spot ETF, in my mind. I know it's pumped the altcoins. As the odds of both getting denied just seems astronomical. Because if they're going to decline the ETH one, it seems like they would have to decline the Bitcoin one. So that would triple their number of rejections that they've ever had. It's just hard for me to. It seemed astronomically long odds.
Oh, absolutely. I think the odds that they both get. I mean, I could see Bitcoin being approved, maybe ETH being denied or delayed, but I would be surprised if even that happens. I think the appetite in the institutional market is really high for spot products, not really for futures products, and BlackRock sees that, and so BlackRock is going to ensure that we get those approvals and that those approvals go in BlackRock's favor. It'll be interesting to see if we see more applications for ETH spot ETFs in the next week or two as Fidelity and all of the other major service providers start trying to put in their own filings.
Yeah, that's like an easy bet. I don't know if they got something going on a little bit for that one, but it seems like an easy bet there. The other kind of exciting news happening, kind of fueling, is that the SEC has begun those negotiations with Grayscale regarding the conversion of the fund into a Bitcoin ETF. Now, the Grayscale trust has like the discount to NAV, so you can buy basically Bitcoin at a discount if you buy this trust, and that was hitting some pretty astronomical discount percentages. It's now down to around 10%, which is the lowest it's very, very long time. Now, according to multiple reports on Wednesday that include SEC documents, the SEC has opened negotiations with Grayscale over the details of its GBTC, that's their ticker symbol, to spot ETF conversion. They've been in talks with the SEC's Division of Trading and Markets and the Division of Corporate Finance after a court ruled that the Wall Street regulators should approve Grayscale's spot ETF. Grayscale's chief legal officer, Craig Salm, said, quote, "There are still things that have to be worked through. Overall, it's been a good engagement, and it's a matter of when, not a matter of if anymore." Adding to that, he pointed out about the conversion of the SEC that the SEC's Trading and Markets he also cited that the Department of Corporate Finance Division plays a vital role in improving the ETF application. So just kind of adding a little more fuel to the fire that is maybe happening.
I mean, I think this makes it even more clear that we are going to see the approvals. It's a matter of when, not if, and I think that they probably want to work out the details of the GPTC before they approve all the other ETFs. That being said, there is a window open right now between now and November 17th to approve all this for Bitcoin. And James Seyffert showed that the approval could come earlier than expected. And he cited this 8-day window. But he said that this is open because there isn't a comment period open during that 8 days. But otherwise, they would have to wait to approve them until a later date because there would be comments opened on November 17th. Yeah, on the 18th. So it's interesting. There's definitely fuel to the fire that they're starting to see and think that the approvals are nearer than farther. That's also being fueled by Valkyrie announcing their ticker symbol for their Bitcoin spot ETF, which is going to be BRRR, which is super interesting, kind of a joke to anyone in the crypto community. Money printer go burr. I think
wild.
This is also kind of interesting because BlackRock has said that they think that the SEC will approve their spot Bitcoin ETF by January. So this is a very important thing, is that they're saying by January, so not necessarily in January. So does that mean that we get an approval in December? I still don't think so. I think we get an approval in January rather than by the say I guess by the end of January rather than by January. I think there's just too many comment periods that are going to be open, and the SEC doesn't want to give anybody a competitive advantage, and I think it would be a mistake for them to approve one without approving all of them at the same time. That being said, we've got a few different players in the space that are kind of saying approving them at all would be a bad thing for Bitcoin and decentralization. However, what's not bad for decentralization is subscribing our channel, because we provide decentralized every week and provide it in a quick and succinct way for everyone to understand what's going on in the market. So please consider liking and subscribing because it really helps us out. That being said, FinCEN has proposed some insane special measures regarding Bitcoin. They want all regulated entities, so virtual asset service providers, VASPs, banks, financial institutions, or entities like casinos, to by default submit reports of any transactions interacting with mixing within 30 days of noticing the relevant transactions and its association to mixing activity. So basically, they're saying that privacy should not be allowed, and that if you are using Mixer, you're reported as if you are assumed to be a bad actor. So this is a pretty strong and harsh proposal by FinCEN, and I would definitely think that this is anti-blockchain and really anti-decentralization. So I really hope it doesn't move forward. And it's... Go ahead.
What are you gonna do? Yeah, well, the SEC has been delaying, kind of Bitcoin ETF, and there's a lot of excitement around it, right? Like even this pump right now, maybe it's going to die off. It doesn't happen before the 17th, but maybe come back after. And maybe it's a sell the news event, no, but there's kind of a lot of excitement around. But they're kind of running out of time. But there's kind of another angle of attack. So they're using FinCEN, they're using the Department of Treasury, as opposed to the SEC. Last week we had Elizabeth Warren and her crypto army about, Hamas terrorists using Bitcoin for fundraising, even though it wasn't a lot of money, but it's still just like an angle. They're kind of highlighting anyone who uses a mixer and wants to be private. You can't, or that it has to be reported. Now the fight's not over, but maybe this is just a new angle for them to attack now that the SEC can't delay thing more, as the market kind of moves forward.
I mean, I don't think that's a necessarily wrong assumption. It's definitely very possible that is the approach that they're taking. I would say that part of what's going on is trying to find a new way to establish regulation, and I think they've now accepted that it's going to be part of the system, and now they're just trying to find the best way to regulate its participation in the system. So, yeah, using treasury and financial rules would be their kind of their angle of attack. And I mean, Arthur Hayes seems like he would be happy if necessarily these ETFs don't get approved and the SEC can continue on their reign of terror, because he warns that institutional embrace of financial products might spell the doom of the decentralized ethos of Bitcoin, and that the large immovable blocks of Bitcoin that would be held by these financial institutions would effectively freeze the assets in place. And he says that nations wanting to keep their citizens on the fiat bank could use these institutions as proxies, essentially by making the liquidity and the availability of Bitcoin too hard and too challenging because of basically limited immovable blocks. So very interesting. He says that they might hold them within the ETF constructs, which is reducing Bitcoin to a financial asset rather than a functional currency, and basically neutering its decentralized nature. I personally disagree with this statement. I think that Bitcoin is already a financial asset rather than a functional currency, and has been at least since the last bull run, if not longer, because we have portions of Bitcoin that have not moved in 10 years, 5 or 10 years, and there's some pretty massive blocks of that. And then we also have the fact that MicroStrategy controls a significant portion of Bitcoin overall. And so there's a lot of pieces of Bitcoin that are already not moving. So maybe the ETFs would accelerate that, but I don't think that Bitcoin is a functional currency in and of itself.
Yeah, certainly not. But it is an interesting point. I mean, the broad argument is, we're all excited about this short-term number go up idea, but could it be detrimental, kind of the long-term vision of Bitcoin? And if everyone starts buying their Bitcoin from these national, quote-unquote, national agents like BlackRock that could be influenced by the government to, or even holding so much Bitcoin that it affects the consensus model of Bitcoin, like someone actually hold 51%? It's hard to imagine. Just things like that. It's an interesting concept to bring up. Just that, don't be too greedy. It might affect the long-term longevity of Bitcoin.
I mean, to be fair, though, there's 91% of Bitcoin's been mined, and a huge portion of that is in long-term maxis holdings. So in order for for BlackRock to get a hold of even 51% of Bitcoin, a lot of maxis would have to sell their Bitcoin.
Yeah, that's true, but it's such a small percentage of the world when you really think of it. And if the number goes up enough, it's very tempting to sell, and then,
Yeah, but then are you truly a maxi like Hayes describes? To me, it really doesn't. His argument doesn't hold up, in my opinion, and I definitely think that there are risks. I think liquidity risks and everything associated the Bitcoin ETFs, but I don't necessarily think that the argument that Bitcoin's a currency, a functional currency, is correct. I think it's really an asset, a financial asset, and a store in this current term.
Well, that's not the only kind of about this, surrounding this crypto rally and the ETF narrative. We also have JP Morgan that says this crypto rally looks overdone. They're looking right today with JP Morgan analysis expressed doubt about the sustainability of the recent crypto market surge, stating that the analysis identified two major factors that have so they're calling out two factors that have led to the current rally we're in. One, the prospect of the spot Bitcoin ETF, which we've been talking about, and that it will bring in new money. And then two, that the SEC's defeat in Ripple and Grayscale is, something to get excited about. And that's what's leading to this rally. And they counter these. So they counter point one about the new money, saying instead of fresh capital entering the crypto industry to be invested in newly approved ETFs, we see as a more likely scenario existing capital shifting from existing Bitcoin products, such as the Grayscale Bitcoin Trust, Bitcoin Futures ETF, and publicly listed Bitcoin mining companies into the spot ETF. So kind of money that's already in the Bitcoin sphere just going into a safer realm and sphere. And then they reiterated that the spot Bitcoin ETFs already exist in Europe, which we kind of earlier, and we kind of shot that down a little bit. But they bring it up again, and it's a fair point. And they have garnered little interest from investors since the launch. And thus they remain skeptical that this is going to lead to a bunch of fresh capital that will enter into this argument of new, and that it may be a sell the news type of event. Now, on terms of new, which is about the regulation and that we're having all these Tory wins is it's far from clear that regulatory tightening of the crypto industry will lessen significantly going forward, given how unregulated the industry is. The U.S. crypto industry regulations are still pending, and we do not believe U.S. lawmakers will simply shift their stance because of the above two legal cases, especially with the memories of the FTX fraud still fresh. And like we've just talked about, we have these new fintechs. I mean, there are many vectors they can attack the industry with.
I'm going to kind of counter a couple of JP Morgan's points, although I do think that some of this rally is a little bit overzealous. I think there's a little bit kind of every time we talk about the ETFs, the market rallies, I think, much. I think they could be right that the approvals spell a bit of a solid news event, but I don't necessarily think that is meaning that we're going back down to 15 or lower. I think that just means maybe we bounce off a support somewhere between 28. I also think that their narrative about just shifting, I don't think that, I mean, Grayscale is going to be converting their trust. So it doesn't really mean, like, that money is definitely going there, but BlackRock is going to be moving more money in. There's going to be more money in the system. Maybe it just won't be as much as a lot of investors and crypto investors think from the get-go.
Yeah, one thing they bring up is that, the Fed hasn't pivoted yet in terms of that kind of new money. So that's true too.
Yeah, that's definitely true. A little bit about because we do have some news on the macro to look at, but I think we should touch a couple of regulation stories.
I wanted to bring up one other thing that you mentioned, and it was this idea of new money coming into the system. And we were looking at it last week, looking at like total money system, and it did kind of break through some resistance levels. But you brought up a really important point that although it did, a higher high in terms of charts and kind of breaking some resistance areas that we've been in this whole kind of that it's not necessarily new money coming in, as people who are already in the space just getting a little bit excited about what's going on right now.
Absolutely. I mean, I'm looking at Total 3, and Total 3 yesterday really kind of showed two kind of solid days of breakout above a key resistance point just above around 400 billion, which we've kind of battled against since November of 2022. So essentially a good solid year, kind of where we fell below in June of 2022. So it's kind of an interesting number. We fell below it today, but we went through it for Total 3, which is very interesting and does suggest there is some new money, but probably from existing investors. I wouldn't necessarily say it's new people joining the crypto. What's more interesting,
people who are in the space that have had money on the sidelines.
Yeah, I think it's really like potentially investors like you and me who had some capital sitting on the ground, like sitting in their bank account that they were getting ready to deploy, and kind of decided, hey, I wasn't sure if it was going to go lower. It's things have hit numbers that I said I would put my money in if they hit there, and so I'm bringing that money in.
And it's getting later into the bear market, and you don't want to miss it take off. So you're like, all right, let me get this money in.
Exactly. Looking at Total 1, which is everything, the whole crypto market, we are still at a new yearly high at 1.36 trillion. It was almost 1.41 earlier, a couple days ago, and we're still holding above a key resistance level. Of that total, we're about 13.35 trillion had kind of been a resistance since the the Luna collapse, and so that was a good kind of thing to see, which means we're seeing money in alts, we're seeing money in Bitcoin and well, and so generally there is some new money entering, whether it's from existing people can argue, but I think it's generally from existing events, but good to see.
Well, I thought that was and yeah, I just wanted to share that. Also, did you know that most people who check out our video are not subscribed?
If you look at our analytics, that we over 50% of viewers of our videos are not subscribed, and so please consider subscribing to catch our videos as they drop. We really appreciate your support, and I think this news is really important for anyone who is watching the crypto market.
All right, let's get into some of this regulatory news. We had a U.S. Senator introduce a bill to protect Bitcoin self-custody. Always love to see it, right. So what was it?
Bud introduced, he's from North Carolina, he's Republican North Carolina, introduced the Keep Your Coin Act, which is aiming to protect an individual's right to conduct transactions with cryptocurrency assets without the need to utilize a third-party intermediary. This is kind of helping enshrine something that's already within the Constitution for dollar cash, and he's trying to make it is being carried over to cryptocurrencies, being supported by Warren Davidson. And it mirrors legislation that Davidson had introduced in 2022. Pretty big, especially after comments made by Elizabeth Warren a week ago about how she thought self-custody should be legal. It also follows several state bills in Texas, one of the Dakotas, and Arizona that aim to protect self-custody. And I think this is a very important bill, and I think even as a non-U.S. citizen, I think this is something that I hope passes. It seems like a common sense type bill, and I would hope that it then the Senate before
I think
the
this
end of
goes to show just how complicated this issue is, because you have to reestablish kind of what seems like a fundamental human right, self-custody, but now we have new digital property, which is essentially what Bitcoin is. Where the world's going, I mean, like we were talking about, I think on other episodes, like my son may do most of his work in virtual reality in the future. So there's a digital world coming, and the rights that we established in real world, quote unquote, need to be reestablished in the digital world as well.
Absolutely, I think there's a lot of things that we'll probably see reiterated with this digital space. That being said, the Bank of England is taking steps to recognize stablecoins as a payment option for goods and services. So the central bank has released a plan to help govern the stablecoin crypto market, and alongside the financial conduct plan to use the rules that were released by the UK last week. And so this is a pretty interesting move, and just seeing how stablecoins will be recognized just like credit cards were, just like cash, and just like debit cards were. And so I think this is a pretty interesting and welcome move for stablecoins in a market that hasn't always been, thinking back to Terra Luna. Heading into macro is...
It is an interesting, just to touch on this story a little bit, is an attempt by UK to publish a clear set of rules, which the United seems to be behind on. So we're seeing other countries kind of take the lead in establishing kind of clear guidelines for things like stablecoins. We can't seem to get it figured.
Yeah, we haven't exactly figured that out in the US, but I'm glad to see that there are rules appearing so that they do have guidelines that they can kind of look to.
Something to work with, yeah.
Yeah. That being said, Bitfinex is saying that the Bitcoin price is being supported by expectations of softy. They released a pretty interesting, basically, crypto's outperforming traditional assets, even though the splash is,
Right.
and they're kind of showing remarkable resilience. And they're saying that this is potentially having to do with kind of expectations that, the market and is going to pivot. This is kind of based off the statement that, it doesn't seem like the Fed is going to tighten any further, but they will potentially continue to hold rates. And we have seen the Fed upgrade their outlook on the U.S. economy, which is signaling increased confidence. So definitely fueling the crypto market, and they're kind of, despite a weakening, there's definitely not lost momentum, and they're kind of signaling things that could contribute, including what's going on with PayPal and their subpoenas, Sam Bankman-Fried being convicted, and a potential partnership between the National Bank of Georgia and Ripple to pilot a digital Georgian to basically introduce Georgia. So the country of Georgia, to be clear. This is sort of interesting, but I don't necessarily think that they're taking everything that's really going on in the market and expectations in the market. We do have CPI, which will be coming out as drops, where expectations for CPR have dropped from 0.4% last month to 0.1% this month. I am intrigued target. It would be really dependent on food and energy. So we'll see what happens because they're really expecting core CPI to remain stable at 0.3%, which is the same that it was last month. We'll see what happens. I've got a feeling that CPI doesn't hit that expectation, but you never know. I have been wrong, and I will continue at times. If it does hit the 0.1 expectation, it means that CPI year over year comes down to 3.3%, down from 0.7% last month. So that is a significant decline and getting us within that 1.3% of that. That being said, core CPI would stay stable at 4.1, and that to me is what troubling. Core CPI, which is really everything excluding food and energy, is staying really sticky. And food and energy can be very, very volatile, whereas these tend to be a little bit more constant over time. And the fact that they're remaining high at this constant rate, to me, suggests that there's still more work to do. And we really need to see that core number come down. And we'll see what cool core number this month. Whether if it's interest rates, you maybe can just kind of write it off. But if there were other factors, then I would say that is something to watch. We've also got PPI coming out this on Wednesday, with actions for PPI just dropped significantly as well from 0.5 to 0.1 month. Core PPI to remain relatively stable. I'm going to be very interested to see how these two numbers play out in the next little while.
We get to see them this week, and then it kind of just leads in, what is the Fed going to do? I mean, in the end, what is the Fed going to do? And looking ahead at the kind of tool that we look at, I mean, it's looking like at least two more meetings where they either raise or do nothing, with the likely expectation that they do nothing. And then after two more meetings, we start to see some hope for some rate cuts start to come in, 30, 40, 50% chance as we kind of move forward into next year.
Yeah, looking kind of, there's slight hope of a pivot as of March. Really, the main meetings are really where to see a pretty dominant interest in thinking that a pivot is going to happen around that time. And I would agree to see how to play into this. These expectations of potential rate increase have kind of bounded over the last week. And so I'm going to be interested to see a change moving forward, especially with the publishing of the data.
Well, we're still 30 days out from the next meeting, so a lot change. But yeah, we'll be keeping an eye on it. And we can kind of get into some of a couple of fun stories. With the of Base, the layer 2 from Base, there was a big story kind of coming from another big exchange. Although it's not listed, on the stock market, it's one of the bigger exchanges here in the United States. They're seeking partners to build a layer 2 network. And this is according to anonymous sources, but there is some significant hype around it. Kraken cryptocurrency exchange in the United States considered working with major blockchain technology companies to establish its own layer 2 network, claiming to be looking at collaborations with Polygon, Matter Labs, and Nil Foundation, which I've never heard of, among others. The conversations, however, are still ongoing and have not been made public. And in addition to that story, on November 12th, just yesterday, or 2 days ago as we're posting it, Solano founder made a post. Hoshinskin made a post on X app indicating that his interest in inking a partnership deal with Kraken for the development of a layer 2 network. This is pretty cool for Cardano, honestly. Kind of big news for them. The caliber of entity vying for the position to do this for Cardano is building up intensely, and the post made by the Cardano founder was more direct way and a public way of kind of shooting his shot. So then this, like I said, this is all based on the influence on the success of base in terms of total value locked. Base, which is, block 300 million, making the 10th most popular chain.
Yeah, Cardano gets it. I've heard of
Well, there's
messaging
a
that it is
Polygon
Polygon.
announcement
Yeah,
coming out on the 14th, and everyone's speculating what this might be.
and I've heard a lot that it's Polygon that's gotten a partnership with Kraken. They've also gotten a partnership with Ubisoft, and so I think there's a lot of Polygon's got a lot of hype, and I think it'll continue to get a lot of hype. It's why it's one of my top picks market. Um, Talking about being listed on the stock market, which is the issuer of USDC, has plans to enter an IPO in 2024. The second kind of major crypto company outside of Bitcoin miners and Coinbase. Um, they're talking about an IPO in early 2024. Coinbase is still down over 50% from its IPO price, but has been rallying hard alongside the crypto market.
Yeah, it
And
was down as low as 40 or $50, and it's back up into the 90s.
exactly, um, they said that it's been a long-term part of their strategic aspirations,
Mm-hmm.
but they're being really tight-lipped on the details. He said, um,
It's an interesting play, kind of a high risk stock market play. But there's not in this field where you can buy stock. So I'll be watching this one. I like early stocks like this. I mean, I bought some Coinbase and go well. It's like getting in early on the tech stock. I mean, remember when Facebook first launched? Anyone who bought Facebook, happy. That's for sure.
I think there's definitely some possibilities here, although I do worry that it could have some negative impacts on how they could do to the crypto base in terms of yield generating stable coins or coins. It might kind of go against their fiduciary interests to those kind of products in the market because it would eat into their profits. So I think it's a double-edged sword, but definitely an interesting way to the market without necessarily having to buy crypto, so that you can maybe do it in your Roth IRA or your 401k or equivalents in the US, Canada, or in the EU. As we said, Polygon is definitely making major news. They got an announcement coming out on Tuesday when this video publishes, and on top of their Polygon 2.0 upgrades, they also announced a grant program called Polygon Village and a Near Foundation and Polygon Labs collaborative effort to develop a zero knowledge prover for WebAssembly blockchain. So WASMs, which is poised to bridge the gap between WASM based Ethereum ecosystem. So some pretty big is by Polygon there. Play with Ubisoft, so definitely something to keep your eye on. And then Thorchain. You definitely had some interesting information on Thor. You want to share?
Third largest DEX, the central exchange, which kind of caught me off guard. But and I see this Ruin token. While it seems to be very volatile, which can be a good sign actually when you see a lot of volatility. I mean, it's bananas lately, but Thorchain did 1.32 billion in trading volume over the last week, and it only trails Uniswap and PancakeSwap. So I think they passed Curve Finance at number 4 among decentralized exchanges, and they also boasted the second largest in terms of trading volume over the last 24 hours. So we're ahead of PancakeSwap there, nearly 50 million more than PancakeSwap. So the future's looking bright for them. Thorchain is considered a multi-chain version of Uniswap, as users can swap between Bitcoin. So I thought that was interesting. And the Thorchain project, just another little note, was launched by a team of developers at the Binance Dexathon in 2018. So it's been a while, although it's coming on my radar, I guess, with many of its founding members remaining anonymous. So something to keep an eye on.
Something to keep an eye on. And looking price-wise, it's sitting at about 4.8, which is a massive rally from $2 in October. And that being said, it all-time high in May of 2021 was $21. So definitely it has kind of skyrocketed.
Well, a lot of times
20%
when you get a
day.
big pump, it can track, it can retrace a little bit. We'll see kind of what happens with the market moving forward. Shout this pre-halving year. There's been a lot of excitement lately. Now it's hard to predict. I mean, if you want a prediction, I could try to say what's going to happen, and you can pretty much count on the exact opposite going
Yeah, just mentioning based on of November is about 50%. So definitely some room for it to come down before continuing up. But that being said, thank you for listening to Decentralized News. We are asking you to please consider subscribing and catch our videos as soon as they drop. And our goal is really to provide you with unfiltered content that'll bring genuine discussion that'll help the entire space grow. We're really appreciating all the support, and we hope you like and share our video with all of your friends. We are not financial advisors, and the show is presented for educational and entertainment purposes only. We really thank you for your support and hope you stay tuned for our next episode.